Welcome to another S&P 500 analysis. An extraordinary accomplishment by the market last week. I will elaborate more on that when we get to that discussion a bit later. In this video, we'll analyze the price action of the S&P 500 and the other major market indexes, the market sentiment, market internals, 10-year yield, US dollar, silver, and gold, and oil, and yes, the index ETF, the diamond, spider, QQQ, and IWM. So stay tuned. Okay, let's do a quick recap of what the indexes had done last week. Looking at this table here, we see the Russell 2000. It's actually the top performer last week, gaining 3.56% or 66.5 points or so. You can see that right now it seems like it is forming this nice little wedge here, and so we'll be watching this to break out and come up to this 2000 level here. Now we're going to take a look at these indexes in a little bit more detail later on in this video. So we're just going to do a quick rundown and do an overview recap for right now. And looking on the next one is the NASDAQ 100 is actually the next top performer, the second top performer on the list here, and you can see that it is breaking out, took out this pivot high here, and it gained 3.5%, 529 points or so. Then on the NASDAQ Composite is the third top performer, and it gained 3.3%, 452 points. Then also you look at the S&P 500, it gained almost 2.5%, or 106 points, followed by the New York Stock Exchange Composite. Then the Dow Jones Industrial, and the worst performer for the week was the Dow Jones Transportation. It only gained 1.72% or 267 points. So here looking at this weekly chart of the S&P 500, we see the range also got expanded to 137.84. And it's a nice solid bullish candle here, and it gained 106 points or 2.42%. Like we said earlier, and also it is above this 10 and 40 week moving average, and also is continuing this one-time framing up. And what we said when we say one-time framing up, it is putting a higher low, and also it formed a nice series of higher high and higher low. So we are in this near-term uptrend. And looking at the sentiment chart here, we see the VIX is still under this 13 level here. So the market participants are still pretty complacent, and also the put call ratio is down at 0.66. And looking at the up down volume ratio for Friday, it seemed to be quite negative. We got almost 5-to-1 in favor of the down volume, but the remaining of the week, the earlier part of the week other than Friday, was pretty positive. So on Friday we seem to have a little bit of a sell-off there. And also the advanced decline, the daily advanced decline, were 1,487 more declining issue than advancing issue. But the other 4 days of the week, they were positive. And in the New York Stock Exchange, the new high still outnumbered the new low, although it's not much, but it's still more than the new 52-week low. On Friday, it finished with 84 more new 52-week high than 52-week low. 110 stock make new 52-week high, and only 26 stock make new 52-week low. Now here is the extraordinary accomplishment that I was referring to in the introduction, is the cumulative advanced decline line in the New York Stock Exchange versus the S&P 500. Remember earlier we were looking at a negative divergence between the AD line and the S&P 500. And we said there's only 2 possible ways to resolve that divergence. One is for the S&P 500 to come down to resolve the negative divergence. The other way is for the advanced decline line to come up and reverse the negative divergence. And on Friday, well actually on Thursday, it made that accomplishment, made that achievement, and reversed the negative divergence by taking out this high on the advanced decline line. And as you can see, the S&P 500 is lower than this high here. So now we're basically talking about a positive divergence between the advanced decline and the S&P 500. So that's a reversal. And we could see the S&P 500 could come up a little bit more and possibly even take out this high here and get above the 4,600 level. Now we'll talk about that a little bit more later on in this video when we look at the price action in a little bit more detail. But again, it is an extraordinary accomplishment because we do not see such a reversal. And just to refresh for those that have forgotten, we basically was looking at this negative divergence between the advanced decline and the S&P 500. And look at the NASDAQ market. The NASDAQ also closed down on Friday and got a minus 1.8 up-down volume ratio, in other words, 1.8 to 1 in favor of the down volume. And the daily advanced decline, there were 1,812 more declining issue than advancing issue. But the earlier of the week, the first 4 days of the week was quite positive. And for the NASDAQ market, the new high, new low, we did see somewhat of an expansion on the number of stock making new 52-week high last week versus the new 52-week low. Right now, we are looking at 110 more 52-week high than 52-week low on Friday. Now, for the NASDAQ market, unlike the New York Stock Exchange, it is still trying to work off this negative divergence. So you can see there is a quite steep of a negative divergence versus the NASDAQ 100 climbing up to new 52-week high. And looking at this yield curve, we're still looking at a inversion between the 10 and the 2. We see minus 0.938. So it's still pointing to the direction that we are going to see a recession. And after last Wednesday, a softer CPI number came out. We saw the rate came down. Also, the 10-year yield came down. And you see that it coming down back to this 3.8% level here. After earlier, it touches 4.09%. And as the 10-year yield came down, we also saw the US dollar came down. Remember, we're talking about this 100 level. Right now, it's pretty much sitting at this 99.959. So it's pretty much just sitting at that 100 level, and we could see it probably get go lower than this. So we just have to keep an eye on this right now to see how the 10-year yield will behave in the coming weeks. And here's the US dollar future. We see that it came down to this ledge here and sitting somewhere at 99.6. So unless we get a bounce back up, we probably will see it auction down to this lower edge of this balance area, and that will be somewhere around 98.45 area, and possibly even come down to this low here, and that would be somewhere around 98. Now, if we could get a bounce, then look for it to come back up to this level here, this 100.83, and see do we get a rejection and push us back down, or would it get back into this balance area and try to auction back up to this 102 level. And the oil will continue to move higher here, as it's strange it might seem, but with the US dollar going down, oil prices go up. So in regardless there's a recession or not, because it is all about the US dollar. So right now it seems like it is coming back up and sitting at this $75 level here. So we might see it inching itself back up to this 83 level. So we'll keep an eye on it. You see silver really got a surge. We're basically looking at these bear flags to come down to this $22 area. And as you can see, anything could happen, right? No matter what you're trying to project. That's why we have, stop losses, or, basically have some level to stop out. And right now, it looks like silver could be making its way back up here to this 26 area. So keep an eye on this 25, 28. If it could break above this level, then look for this 26.38 level to be in play. And gold was also quite resilient last week as well. You can see that it broke through this 1940 area, and now it's pushing up at this 1960. So if it consolidates a little bit and then push up again, I wouldn't be surprised to be looking at 2000 relatively quickly. But if it come down and test this 1940 area, once again, we could see a little bit of a test and get a bounce back up. But if it breaks, then we could come down to this 1900 level once again. Now let's take a look at the indexes in a little bit more detail. Looking at this daily chart here of the SP 500, as you can see, last week we have 4 consecutive updates. And came Friday, we saw a little bit of a down day on Friday, and you see that it closed above the upper range of the weekly expected move, and came up to this 4500, the 4512.94 here. I have this line here. It came up and then kind of got rejected after it made a peak above that level. So all in all, it still came up and tagged the 4500 level that we're looking for. And for the coming week, the market is pricing in a high, the upper range between 4561.67 and 4548.90, and that would be the upper range. And also for the lower range will be between 4461.90 and 4447.50. So what the market is projecting is possibility on the downside is to fill this gap here. And then on the upside is basically get above this 4550 and possibly run away and come up to this 4600 level and this 4637. Remember on the earlier chart we looked at was the this pivot high here at 4637. So if it could get above the upper range of the weekly expected move, we could see this to be in play, this 4600 and above to be in play here for the S&P 500. And looking at the NASDAQ 100 for last week, we saw this NASDAQ 100 found some support down here, somewhere near the 14,900 level. And then on the CPI report, it gapped up and came back up to this upper range of the expected move. As you can see on Friday, it got a little bit of a shooting star bearish type of candle, but it's still above this 15,500 or 15,600 area. So we'll be looking for a possible pullback next week and possibly come down and fill this gap here. And the market is pricing in for an expected move somewhere in the near the 16,000 level. The upper range is between 15,900 and 15,821, and the lower range is between 15,300 and 15,250. So the lower ranges kind of tell us that if the price moves down to this area, it will fill this gap here and possibly come down to this gap down here near the 15,000 area, 15,100 area here. So we'll see what it comes down to this area and even possibly break and dip out this low. If we take out this low, then we're going to reassess to see where the next level of support might be. It could be down here at this edge here, or it could be down here at this ledge, this high volume node. We'll talk about it when it gets to that point, but right now we are not projecting it to break this low here for the coming week. But we are projecting to expect maybe this gap will be in play and get filled before it get another push up and possibly come up and try to take out the 16,000 level. For the Russell 2000 for the coming week, we're looking for this gap to possibly see it to get it completely filled and maybe come down and check this 1900 level once again to see would it get a bounce back up, or would it continue to come down and to this 1816 or 1820 area. Remember last week we were looking for that possibility of coming down to this level here. So I'm not saying that it will come down in the coming week, but that would be one of the possible downside scenario. The upside would be come up, take out the 1960 and work itself up toward this 2000 level here, essentially this high up at this level here. And for the Dow Jones Transportation, we saw the Dow Jones Transportation came up above this 16,000 level, then pulled back, and now dipped back below this 15,888. So right now we're going to be watching the Dow Jones Transportation to come down, fill this gap, and check this 15,650 area and see what to get a bounce back up and get beyond the 16,000 level and try to move up to the 16,200. Or would it continue to move down and double check here on this 15,321? And looking at the Dow Jones Industrial, we see that it was up every single day of last week there. And you see, even on Friday, it gapped up. Right now, we're basically looking for the Dow Jones Industrial to see would it be able to come up to this level here, somewhere around 34,750, before we see maybe a little bit of rejection coming back down and fill this gap here and possibly work itself down here and fill this gap if it doesn't hold this 34,277 area. And for the New York Stock Exchange Composite, we see on Friday it kind of pulled back after 5 consecutive updates. So right now we're looking to see would it be able to hold this 15,969 or near this 16,000 level. And if it doesn't hold, look for this gap to cut fill and possibly work itself back down to this 15,700 area. But if it could hold this level up here, then we look for the New York Stock Exchange Composite come back up and try to take out this 16,200 level. Now let's take a look at the ETF for the index E, starting with the diamond, the ETF for the Dow Jones Industrial. As you can see, last week, every day of last week, it was an update. And even on Friday, it was up. And right now, it's sitting up at this edge here near the 346. And for the coming week, the upper range is projected to be 349.60 to 348.80, and the lower range is 341.50 to 340. So as you can see right now, if it continues to move up, it will come up to this level somewhere around 348.54, and that will essentially come up to this upper range. So once you get up to this upper range, this 350.27 and 348.54 will likely be tagged. So right now we are sitting right at this edge here, and if we move up above this 346, then the 348 would be the next level to keep an eye on. Now, if it projects to come down, say if it pull back, then we look at this small gap here to get filled, then we'd be tagging this lower range of the expected move, and I'll be watching for it to come down and test this high volume area for possible support. And if that doesn't hold support, then it break down and come down to this area, then we be looking at these low, making a lower low, then we will need to reassess. And for the SPY, the ETF for the SP500, we see that it closed way above the upper range of the expected move. And right now it's sitting up at this 450 area here. So for the coming week, the market is pricing in an upper move of the upper range of between 455.30 to 454.10, and the lower range is between 444.50 and 43. So if we continue to look for a pullback and look for this lower range to get tagged, and once again the market is pricing in this gap to get filled on the downside, and also there is this high volume ledge right in the middle of this, or right inside of this lower range here, and in the middle, pretty much in the middle of the gap. So if we see it come down, we're likely to see this gap to get filled and even possibly move down to this level here before we could see a bounce here, because that's we're close to this ledge here on this high volume area. So that's probably where we see maybe buyer will step back in if it breaks below the lower range of the expected move. Now on the upside, if it come back up and continue to push through this upper range of the expected move, then I'll be watching this 457.83, and that is this level here, this pivot high back here. So that is the level to keep an eye on the upside if it take out the upper range of next week's range. If you'd like to see my trade plan for the SPY on a daily basis, then go and check out my Substack page and check out the chat section. You will see that I post some of my trade plan and my idea and also level and what I would most likely look at to plan on doing when those levels are hit. So if you are interested in looking at those levels that I have identified, then go check out my Substack page. And the link is smtraderca.substack.com, and I also have the link in the description below. And for the QQQ, the ETF for the NASDAQ 100, we see that it got a shooting star type of a finish on Friday, and it closed above the upper range of the expected move. Now for the coming week, the upper range of the expected move is projected to be 388 and 385, and the lower range is somewhere down here at 372 and 369.5. And the lower range is projected to fill this gap and possibly come down and fill this gap down here and essentially move the price back into this high volume area here. If the price continue to move up and come up to this upper range of the expected move, then we are looking at the possibility of this level here getting tagged here, and that's this pivot high here. So that will be somewhere around 389.63. And the Russell 2000 ETF, the IWM, had a 5 consecutive update before Friday's pullback and dipped below this 191 area and bounces back up. So right now we're looking at the possibility of coming down and completely fill this gap here next week. And next week the market is projecting a upper range of 196.30 and 195, and that is up at this trend line here on this wedge. And the lower range is somewhere around 188 and 187. So if this come down to this low range, then this gap will be completely filled and it will come into this high volume area here. Then I wouldn't be surprised to see it auction back down to this 183 level in the coming days or in a week or two. Now, if it continue to push up and get up to this upper range, then we see would it be able to break above this trend line and then possibly push up to this 200 area up at this pivot high here. So that would get it close to 200, this 200 level. Now don't forget to smash that thumbs up to give it a like and help me promote this video on YouTube. And if you are new to this channel, be sure to click that subscribe to my channel so you won't miss any of the future video from me. Thank you for watching and stay safe.